Hi traders, so in this video we're going to talk about the market profile on a weekly time frame and how I use it to highlight real areas of supply and demand that we can see and use to form a basis of potential trading decisions. So what we're looking at is the weekly, as I said. Let me just open this profile up. And for those of you that are quite new to profile trading, I'll give you a quick overview of what we're looking at. So this histogram here, this white histogram, that is a volume profile. This is from Monday to Friday, so it's basically a whole week's worth of profile what's being printed. This is the current one being printed this week, and then obviously these ones are previous weeks. So this multicolored profile here, this is a market profile. So this is time-based. Volume profile is volume based at price. Market profile is time based at price. Now these yellow lines and orange lines are called points of control. That is where most tradable activity has took place. So if we look at the market profile, which is time based, this orange line is the point of control for the market profile. And this means here that most time was spent at this price in this week. Okay, that's quite important to know where POCs are. This yellow one is the volume point of control. Yeah, so that's telling us that this here area here at, let me just 1034, that is where most tradable volume took place during the whole week at this level here. Okay, so we use points of controls for either targets, for taking profits, or as areas where we could see a potential trading opportunity, a reversal or something like that happening. So we need to keep an eye out on these when price gets towards them, especially on the historical ones. But I'll talk about that in a minute. So that's point of controls. These horizontal gray lines, that's your value area. So this is based on market profile. So this is 70% is the value area, right? Industry standard, and that is 7. So that's one standard deviation from the mean. Okay, so this is where 70% of the most tradable volume or time took place within this week's profile. Okay, so again, we can use the value areas as potential support and resistance areas. You can't trade the blind. You can't just watch price go up to this horizontal line and use it like an indicator. Oh, it's at that line, so we'll take a position. You can't do that. You have to use other confluences, but it just gives you a heads up. Okay, just like the POCs. Right, so that's that covered. So that's a brief overview. Most of you probably already know what POCs are and value areas, but for those of you who don't, now you do. So anyway, getting back to finding supply and demand zones, all I basically do is just look for high volume nodules, yeah, high volume nodes, right? So we've got one here, we can look at one here, we've got the point of control here, and there's one here. We can see on this one, this is what caused the reversal. No doubt if I open this profile up, we probably got some sort of reaction at this naked point of control. Let me just open this up and we'll see. Right, so there's point of control. We auctioned up, got a rejection at the point of control here, you see, and we came down. So what's that? 1098. We come down to about here before we found a reversal. So what's that? 1023. So 25, 35, 45, 55, 65, 75, 85, 95. It's about 50 odd pips. So we could have got a 50 odd pip reversal from the point of control here. It came back up to this high volume node here, which you could look at as another potential supply zone. Is at edge of a ledge. So expectation would be there'd be quite a lot of people looking to defend their positions at this area here, because if we broke above this ledge on this high volume node, there's not a lot of profile to show that there's much activity taking place, not a lot of interest in trading, so price would literally zip through there to the next like area of interest, which I would imagine would be somewhere here. But anyway, so we then came up to this point, this high volume node here, and as you can see, pretty much to the pip. We got a reversal, and again that would have gone for 1122. Let's take it down to there, say 10975. So that's what, 140 odd pips or something like that, if my very quick math serves me right. So yeah, could have got a big move out of that. So this is how powerful you can see on the weeklies, looking at these high volume nodes, how we can utilize them to make proper supply demand zones. I mean, I know retail would be looking at candlesticks, but it doesn't, you know, it's just a candlestick. How do you know what's inside your candlestick? When you're looking at real market profile, market generated information and real raw data from volume coming into the market through the bids and asks transactions, you can then start building a better picture of where the real supply zones are, especially on these larger time frames, which a lot of people don't, you know, pay much attention to. So anyway, you can see on this one, we got a reversal from there, and we got a reversal from the POC as well. So let's just close this profile up. We'll do one more example and see what happened on the previous week. So previous week, got high volume node there, high volume node here. See that on the volume profile, the histogram, and we got that found the high of a week there. So you're beginning to see, aren't you, straight away, how these high volume nodes can be quite significant in identifying trading opportunities. So let's just pull this back a bit. Right, so look, this high volume node, we opened here, we traded down to this high volume node, which is there, and then that caused a reversal. We then started auctioning up to this high volume node, which set the high of the week, and then we just sold off for the rest of the week. If we'd broken above this high volume node, expectation would have been that we've gone imbalanced. So then we'd be looking at somewhere around here or this point of control here, which, as it's not been touched before, that is called a naked point of control. That holds a bit more weight for a potential reaction there because it's not been tested before. So there could be liquidity and resting orders, etc. there. But anyway, as it happens, we got the reaction from this high volume node. And as you can see, we sold off. So you can pretty much see straight away the power of these sort of areas on the weeklies. So I'm going to talk a bit about how we can merge these profiles as well. So look, for example, this is this week's profile. We got a reversal here, which is come off this high volume node from 1 to 3 weeks ago. But what I would probably do is merge profiles to form a composite. So there'll probably be a, yeah. There we go, that's a bit better. In fact, I might merge that one as well. All right, here we go. So we got what was that, three or 4 weeks worth of merges to make a nice composite here, and we can see straight away areas that we can class as supply zones or demand zones. So look, we can have, this is where we rejected yesterday, and as you can see, high volume node here, and that was what caused the reversal there. We can highlight probably somewhere around here as another zone. So let me just draw these out. This might help you to see it easier. So we'd have, I'd draw something like this on that volume node there as a supply zone. We could probably have something like this as a supply zone, something, there's a high volume node there as a supply zone. if we break apart above here, we would literally zoom up to this edge of a ledge. So we call that a supply zone, and let's call that a supply zone. I mean, this is very discretionary. Everyone's different at identifying their supply demand zones or support resistance, whatever you want to call it. But this is how I just basically would quickly draw it out on a weekly, so we can see major points of significance where we might want to look for a trading opportunity. Once we get towards this area, we can then start looking at smaller time frame profiles, and also order flow with a footprint, etc., and cross-reference that with VWAPs and things like that, and standard deviations, and see if there's extra confluence there for us to be able to take a trade. But basically, that's how let's do this one as well over here. So that could be a demand zone. This could be a demand zone. This would be a little demand zone. Oh, we opened, auction down, tested that, and that was what caused 1, 2, 3, 4 days worth of going bid up. We could probably highlight that would be a kind of demand zone. Yeah, so there we go. That's a supply zone. We auctioned up, rejected from there, came down, auctioned up, rejected, tested it 3 times, and then we broke through it and auctioned on up to the next zone. So that's how I basically draw out, excuse me, well, I don't even draw them out, I just look visually, and I can see normally when prices getting towards an area of interest, I then start drawing it out and paying more attention to it. But you can very quickly see how we can highlight proper supply demand zones using the weekly higher time frame profiles. So I think we'll wrap this one up now. Hope that's helped you, and I'll catch you in the next video.